Hello and welcome to today's webinar. A little housekeeping before we begin. Everyone is muted during the webinar. All webinars will be recorded and sent to all attendees after the webinar has concluded. Tomorrow, the recorded webinar will be sent out to all participants. There will be a Q&A at the end of the presentation, but please feel free to ask questions during the webinar by clicking on the Q&A box at the bottom of your screen. Once the presentation concludes, I will ask the questions presented in the Q&A box. I may not get to everyone's questions, but we will do our best. With that being said, I would like to introduce you to Ruben Franco, President and CEO of the Orange County Hispanic Chamber of Commerce.
Thank you, Edna, and thank you everybody for participating on today's call. A special thank you to Wells Fargo, who is our sponsor for this third in a series on recovery boot camp, and especially on this for access to capital. We do have a great presenter today, Craig Russum, who is our lead consultant for our Small Business Development Center. The Orange County Hispanic Chamber of Commerce is proud to host a Small Business Development Center here in Orange County, covering all of Orange County. And we do have what's called the Finance Center, led by Craig Russum, along with 3 other finance consultants that can help you basically understand the financing ability out there for you and your business. We're here to help you. We provide these services through our SBDC at no cost. We get funding from the SBA, we get funding from the GoBiz office of the governor of the state of California, and we also get funding from banks like Wells Fargo, who's doing today's call as well. And without further ado, I'm going to introduce to you Craig Russum. Craig, take it away.
Thank you so much, Ruben. I appreciate it. Good morning, everyone. I believe I'm sharing my screen already, so if you could see here, access to capital. Yeah, as Ruben said, so I happen to lead the finance team here at the Orange County Inland Empire and the Hispanic Chamber of Commerce. We have a team that's dedicated to reviewing our clients' ability to access capital. But more than that, we act as business consultants first. And that's really our mission, our primary mission here is to help all the folks that have come through SBDC and have access to our consultants. Our team's able to come in and help you evaluate your cash flow, your P&L, look at balance sheets, look at what debt capital can mean for your business. We also have an equity team though as well. So I mean, if you're looking at equity as a means to raise capital, so we do have an equity side here at the SBDC. But what my team is primarily focused on is the debt financing side of things. My background, though, I was owner of retail stores, so especially sporting goods and retail back late 90s, early 2000, and then got involved in the finance sector in 2004. So I've been a broker here in California, mortgage and real estate broker in California since 2006, and then part of UBS Financial as a Series 766 advisor, helping folks manage their portfolios as well. So it's coming out of the SBDC, it's about 2 years now, just an amazing group of dedicated folks that are here for the small businesses and small business owners and folks who just want to be in small business. So we can help folks who are just looking for startups. So if you have a new idea, new project out there, I'd say, COVID, I try and find the positives in most things. And for COVID, we have seen this innovation. We've seen folks, looking at how to pivot either their existing business or looking at new businesses. So we can help in that area as well. So if you have new business ideas, new ventures, we can help you kind of work through those numbers. What does it take? And ultimately financing. Today, we're going to talk more about access to capital for your company. What's out there, what's happening, what do I see in the landscape, and then ultimately how to plan how to access that capital. And it can take time. And so we try and get there early. It seems to be the better way or the better approach and stuff when we're looking at debt financing is that, if you needed it last week, you have to understand there is still a process in place. There's still things that we have to do. And especially given with COVID, it's changed some of the rules, some of the timing of how to access the capital and what that looks like. Excuse me, but the process is still pretty much the same. And I'll dive a little bit deeper in what we're seeing with financials for 2020. What does that mean? How do we grade 2019's performance? What are we looking for with regard to personal credit, personal assets and liabilities? And how do we put all those things together ultimately to help tell the story about you and your business? And then what does debt financing mean for your business? So a lot to talk about today, but I'd like to keep it a little more open forum. So please, any questions that you have as I'm going through this, use, I don't know if we're using the chat box, we're using Q&A. You can drop your question in there and so that we can address them as we're moving along. I do talk a little bit about the economic injury disaster loan. I'll talk a little bit about PPP. So if you had access to those two SBA programs and you have some questions, there's still a lot of uncertainty and questions around the PPP. So if you have some of those questions, I know we have some time today that I can talk a little bit more in depth on some of those questions as you guys may be looking at forgiveness applications or how to manage that with the banks. What does it mean for you with regard to debt financing? So all of those play into each other. So if you have more questions, please let me know just throughout the presentation about those programs or how they can affect your business. So access to capital, it's obviously been on the forefront of our minds as of late. COVID, I mean, we're 6 months in. We had a number of access to programs through the SBA and mostly from the Fed side, right? With EIDL and PPP starting in March, April, we had the ability to borrow, and with the PPP, that a unique feature that we're looking at forgiveness or some 100% forgiveness of that loan. It is a loan that's still on the books. So just understand that when we're looking at additional access to capital, that lenders are going to look at the PPP on your balance sheet as debt until it's forgiven. And so that's something we can talk a little bit more about how strategy-wise, how we can take a look at that. But now as we get in deeper into, just passed through Q3, now we're in Q4, and starting to project or look and see what Q1 is going to look like for 2021, there's this void that's happened with access to capital. PPP has been, the application deadline was August 8th. The EIDL is still available for those who did not have access to it or have not tapped into the EIDL. And that is still available. But for those that had access to EIDL funds, the economic injury disaster funds back in April or May, they haven't been able to tap back into it like the EIDL docs state. You're supposed to be able to go back and ask for additional funding if your business needs it, and we just haven't seen that happen. So outside of those two programs, now we're starting to look and see, okay, what else is out there? What can I do? Maybe your business is well positioned to need growth capital. Maybe you've been able to pivot well enough through COVID, or you were well positioned where you're actually seeing opportunities. And we're seeing across different sectors all kinds of different opportunities that are out there that that lenders are willing to extend credit for. Expansion efforts, multiple locations, that there's an opportunity out there that COVID's presented for those that are well positioned. For those of you that are just looking for access to capital to help survive or to help fund your pivot or your recovery effort, it's a different story that we have to tell. And so we have consultants here in the finance team that can help you with packaging and try and tell that story so that we can find you some additional debt capital. With all that being said, where do we start? What's our starting point when we're starting to look at a client's file or trying to discuss access to capital? I like to start at the revenue stream. I like to better understand your company, where the cash is coming from. Okay, so we're coming off of some historic 2019s. For many companies out there, 2019 was a very strong time period. They were looking to gear up Q1 2020. They were hiring. And so I like to start and look at companies and help them evaluate what was going well. What were they doing well during pre-COVID times from a cash revenue standpoint. So I have a little worksheet that we utilize to help evaluate that. And this is where I like to start. I'll take a look at your 2017, 2018 numbers, P&L year ends, whatever it is we need to do, and 2019 numbers, and understand where that revenue was coming from. For many, it was more transactional in type, like a brick and mortar retail location. We're talking retail. It's more transactional, right? In nature. You already had your cost, everything was in place. You had your point of sale system. You were able to capture the cash. Everything was in place. And then maybe or maybe not, we had a wholesale channel. Many folks did not have this curbside revenue stream, where we're doing curbside pickup and drop off. It didn't exist pre-COVID. It did exist. Many of us just didn't take advantage of it or had any need for it because people were coming in to our place of business. Did you have a subscription-based model in place? This is all kind of pre-COVID, and what was going well. Okay, now March hits, right? April. What type of changes did you have to make as a company to continue or trying to pivot? What did that look like, right? Most of us, we kind of lost this retail brick and mortar, didn't exist anymore, or reduced, right? This was a significant reduction. This was decreasing, right? This was declining. But what we saw was an increase on adding a curbside service. Some of you are adding now subscription-based models or some way to have more predictable type revenue. Maybe you added a wholesale channel, right? So this is just an exercise to help you better understand where the cash was coming from pre-COVID and where it's coming from now. Why is that important? Well, as lenders, and we're trying to review financials for kind of this COVID time period, we need to understand that your success pre-COVID, and we need to understand your pivot, and we need to understand where you're going to take the company from a revenue gathering standpoint. And so this forces you into that kind of mindset to really look at, where is the cash going to come from? What was I doing well? Where's it coming from now? And then, goodness, can we look out 12 months? What does 3 months even look like right now? Yeah, we have elections that are going on that's still trying to get figured out between the House and the Senate. We're looking at, is there going to be a new stimulus package? Are we going to, Europe is seeing some shutdowns again, so are we going to have to go through that again as well? There are a lot of questions that you have to kind of go through in your mind from a revenue standpoint and go through this type of a process so that you can get a better understanding of your position. Right? If we can't answer these questions, or we are still searching for those answers on that pivot, now that we're 6 months into it, it's a different conversation, or it's a different way that we as consultants have to look at your company and try and package it for additional debt financing. So it's okay, right? If you haven't been able to pivot yet, or you haven't been able to kind of figure out that that next step for your company, that's what we're here to try and help you through, right? To help you through that kind of soul searching and review of your company to see where cash can come from. But this is part of it. This is part of the narrative. This is part of the story that we need to tell to lenders if we're looking for additional capital. Now, the banks understand it. The lenders understand. March, we're looking at April, May, June, so Q2, right? July, August, and September. We have full 6 months worth of COVID 2020. More important from a lending perspective is how you were able to adjust. What were you able to do, okay, with regard to the revenue? Not so much that you were net positive or that you're making money, but more important is that a plan is in place, that we're doing what we need to do in order to survive and thrive in a COVID environment. Okay, so I want you guys to understand that. So for most folks, they're looking at access to capital, and they're like, well, Craig, I'm not net positive right now. We're actually losing money, and I'm like, that's okay, right? That's not going to be the determining factor right now with regard to access to capital. More important is going to be 2019 numbers, if you have them. They're going to want to see it. They're going to want to look at the tax returns and how your business had performed in 2019. And then again, it's going to be more about the plan. What kind of plan is in place? What are we doing during COVID to move our business forward? Okay, so it's just a little exercise with regard to revenue that we can help you through. We can make this sheet available to you so you can kind of work through it, so you have a better understanding where your business is moving with regard to revenue. How do we use this then? So once we understand our revenue model and we know where the revenue is coming from, we know what it looks like, now we got to start diving deeper into our expenses and seeing if we're able to close the gap. What were we able to do from an expense standpoint to help minimize the losses, to close the gap, so that we can manage our cash flow, right? The amount of money that's left in our bank account every single month. So once I understand our revenue streams, then we're going to dive deeper into the P&L, the profit and loss statement, and take a look at the expenses and build that out so that we understand what measures you've taken to manage COVID. Were you able to reduce some of your expenses and close the gap? And where does that look like today? And how do we see that moving forward? Did you have access to other pieces of capital? The economic injury disaster loan, PPP, what other cash, what does your balance look like today? So then we'll also evaluate your balance sheet so that we understand that your cash position, we understand accounts receivable. How are we doing on bringing in our accounts receivable right now? It's a line item that we're paying attention to. It's a line item that banks want to look at, right? They want to have a better understanding of your ability to collect on those customers during COVID. Has that number gone up? How are we managing that number? How are we managing our accounts receivable? Okay, and then also on the debt side, what are the liabilities? Where were we 2019 year end? And then how have we managed the liabilities through COVID? Have we added credit card debt? Have we added, we have idle and PPP. Remember, those go on your balance sheet as debt. Other loans that maybe we had to take. How's our accounts payable? How have you done managing your accounts payable moving forward? Compared to 2019, are we getting behind on our vendors? What type of conversations are we having with those vendors? So now we're starting to see that we're pulling the information. We're looking at revenue. We're looking at our expenses. We're looking at the debts and liabilities on the balance sheet. We can then take all of that information and start building out some cash flow projections. Hey, this is really important. So if we're looking for access to capital, we're going to need to produce this document. We're going to need to put this information together in a way that we can show the bank how we managed. So month one, I like to start here with January. This is January, this is pre-COVID. So it gives us some interesting numbers here. We have January and February, pre-COVID time, right? March, month 3 was interesting because what we saw for most folks, here, let me actually pull up the sheet. This is the actual Excel sheet that we use, and we have consultants that can help you through this process so that you can work through it. This is our roadmap, right? This is our roadmap to success with our company, to better understand our company from a cash flow perspective, from a revenue and expense perspective. Okay, so we have folks here that can help you through this process and better understand your business by the numbers. Excuse me. So I like here January, February, March. What we saw typically in March, we saw this significant reduction in revenue, but we didn't quite turn off all the expenses yet. I remember in March, at the time we were thinking, gosh, by June, we're going to be back in business. Everything's going to be back to the same, right? We're shut down for a couple of weeks and we'll be good. Many of you felt the same way. We kept the employees on, we kept our expenses. We didn't have that conversation with the landlord yet. And so what we saw in March was significant expenses, but a 50% reduction in revenue in March. It just happened. Okay, now we start getting into April, May, June. What was our recovery effort like? What was our response? Now that we knew things were maybe going to linger a little bit longer, we had access to PPP. So we had a cash injection, 65,000. Maybe EIDL came through for you. We slowly started to pivot. You can see with regard to the sales, we switched to a little more online, right, than we did previously. So we had an online channel before, but now by July, we've got it up and running. Okay, and so by this point, we're starting to put it all together and building out our actuals. And so we're going to need this this projection cash flow sheet for lenders. The lenders are going to want to see this. They're going to want to understand it. They're going to want to know what your response has been and ultimately what your plan is moving forward, November, December, and then Q1 next year. How are we going to continue to grow? Are we going to be able to close the gap? So in this instance, this example, as you can see, this is my cash balance in my bank. It's continuing to go down, right? In this example, I have yet to be able to close the gap, right? I haven't been able to put it all together yet. I haven't been able to get enough online sales to actually, or I haven't reduced my expenses enough where I'm still spending too much money and not generating enough revenue. I may need access to capital, right? It's a sheet like this that can help us determine if debt financing is going to be the right way to go, or equity financing. Maybe there's a way to bring in a new equity partner. But by going through this exercise with a consultant, or you can do it yourself, now we have a better idea of how much capital that we could need and what does it look like. Why do I need it? How am I going to use those funds? And so this is our basic 12, 24-month projection sheet that we're going to need for any lending. Now, I know we've been kind of spoiled with the PPP and the EIDL, the economic injury disaster loan. They weren't requiring these types of forms, but as we get further away from those types of programs and more traditional debt financing from banks, this is what it looks like. This is the process. And I'd have to say, COVID, again, trying to look for the positives, is that COVID has forced business owners to go through this exercise so that they can have a better understanding of their company. And so for that, I'm grateful, right? I'm grateful that we're back to looking at businesses by the numbers and that we're able to build a plan, right? It's kind of like, starting my business again. I get to go back, but I have infrastructure in place. I have employees in place. I have all these things in place. And now I have an opportunity to kind of rebuild, rebrand my company. And I may need capital to do that. In this example, we do. Well, we may need some additional capital to try and close this gap. And this is what the process looks like. So now that we've built out our projections, we've examined our profit and loss, we've looked at our balance sheets, put all that together. Now what, right? What do we do with this, and how do we put this information together for the capital that we're looking for? I spoke a little bit about the EIDL and the PPP. So EIDL was direct from the Fed. It is still available, even though they have this expiration date of 10/31 still up here. I don't know why they haven't changed the date yet, but the application is still available. And at this time, it's pushing, they're saying into December, maybe end of December, as far as availability for the economic injury disaster loan. It's about a 15-20 minute application, very simple. If you haven't accessed it for some reason, I do recommend, if you're looking for capital, that this is one of the first places to go. Now, your business needs to have been affected by COVID in some way to access this capital. I'd say most people can say yes. But I mean, if you're looking for expansion capital, or you're looking for other type of capital, you're looking to purchase real estate, like right now is actually a good time to purchase business real estate, this would not be the path to go down. So I don't know if you want to put in your Q&A or in the chat box, what type of capital that you're looking for, then I can address your questions more specifically. So feel free, just pop open the question and answer box there. You can type in type of capital that you're looking for or what your needs are. And then I can talk to you directly about that during this webinar about what that would look like. But economic injury disaster loan is still available, 3.75% interest rate, 30-year amortization, no fees. It's the least expensive business loan that you're ever going to have access to. So still highly recommend this as an option. PPP expired as of August 8th. They are sitting on $135 billion left over of funds that were never allocated or spent. Since then, we have been waiting patiently to find out what's going to happen with that extra cash that they have sitting in the program. Unfortunately, nothing yet. And given the state of the elections right now, it doesn't look good for us to see a PPP 2.0 or an additional program. They have some other things they need to solve and sort out with regard to the House and the Senate and the presidency before we're going to see much movement. So with regard to doing projections and looking at my business, I cannot rely on the fact that a second stimulus is going to be happening anytime soon. Okay, that's unfortunately just where we're at. And when we're doing our projections, like I was showing on this sheet, I can't assume that suddenly a PPP 2.0 is going to happen or another government stimulus cash infusion is going to happen. So that's why I have to start planning now if I think I'm going to need access to capital in the future. Because, even if we started today, it would be a real challenge to try and get funding completed by the end of the year. So even looking at access to capital pieces outside of the EIDL, PPP, or other Fed, it may push into next year. It could be 60 days out. So that's why we need to start the process as early as possible to know our pathway, to understand what we need to do, and so that we can time it properly as far as having access to that cash. So what do we have? The SBA working capital, typically called 7A loans. There's different types of 7A out there between Community Advantage, There's loans that are more specific for import exporters. There's goodness, all different programs that you could have access to. The 504 is typically a real estate purchase, which we're at some historic lows with regard to interest rates on the 504. So if you're in a position where you're looking to buy the building that you're in, or some other building that you need to occupy at least 51% of, some amazing opportunities, 10% down. They are still processing and reviewing 504 loans for purchasing real estate. Other than that, what do we see? There are still some grant and loan programs out there that, let's see what we can pull up. This is off of our website that we update to the OCIE smallbusiness.org website, different grant programs and loan programs that are available out there. Okay, looks like a new one from Stanton, looks like just closed down. But some of these are still open. November 11th, Riverside, Quinta, okay, Riverside in Paris, Anaheim. So there are still opportunities out there with your city and county grant and loan programs. So what we're seeing from a lender perspective, we're seeing cities that have access to either CARES Act money that's left over, or they're using general funds and lending out money. It may not be enough for you, between $5,000 and $20,000, but I know my team, we're helping with the Westminster loan program. They're $20,000 loan programs that I think they're amortized over 5 years. Super low interest rate, 1 or 2%. I think I have to take a look and see the details, but we're seeing more opportunities that way. The cities are stepping up to have access to capital. So this is all these micro loans. There's ability to borrow money to purchase equipment. There's purchase order financing. That's what this PO is. Now, all of this access to credit, and even from the city and county level, and possibly state level, what we're looking at, some state level stuff I'll show you here in a moment. You're going to need to go through essentially the same process of putting the information together. We have a loan packaging documentation checklist, okay, that you work with one of our consultants. And again, we offer, it's all free for you guys. It's all no cost consultation. We're paid an hourly wage to help business owners. So you can access all of our services and our consultants at no cost to you. And we have folks that'll help you through this process of putting the documentation together so that you can prepare yourself for debt financing. I'm telling you, it's the same basic process for the cities that what Westminster was looking for, and other cities that are doing loan programs. It's still the basic list that we'll review here today and see if you have any questions about how to prepare yourself, how to package yourself, so that you can obtain that type of debt financing. And so what do we need? It's a recent credit report. There are a couple of services out there, freecreditreport.com, annualcreditreport.com, that are available to you so that you can have access to your personal credit. It's not a hard hit on your report, which is really important. We don't want to affect your credit score. And so this allows you that opportunity to review what your personal credit looks like so that you can prepare yourself, because you will be graded in essence on your personal credit and how you've been managing yourself personally. With COVID, this used to be once a year, but they're actually allowing you to do it weekly. So you can go to utilize these services, just kind of check in and make sure that everything is okay. But I would recommend that you access through one of these services so that you have a better idea of what's on your personal credit report. This way, then we can also communicate with lenders, show them your package, and not have them pull credit on you, at least initially. Okay, this way it allows us to review your file, look at your personal credit, and not have to pull a hard hit, which will affect your credit score. Okay, so that's important. The second piece, this document is called the 413. In essence, it is a personal asset statement. It's helping us compile the information about you personally as an individual, not your business. So from your business, we'll look at P&L, we'll look at balance sheets. This is now you. So any lender out there, they're going to want to review what you have to offer. Cash on hand, checking and savings. Do you have any retirement accounts? And if you have a spouse, this would be jointly. So a lot of folks have problems with this form because they have a tendency to kind of mix some of the business information, especially sole prop. So those of you with the sole prop may not have a balance sheet, and so you're kind of commingling or mixing this information between what's a bank, or what's your business and what's your personal. So we want to try and separate it. We want to have a better understanding of you as an individual. How much cash you have? Do you have any other retirement benefits? Real estate? Do you own a home? Is there a mortgage on that real estate? Automobiles value, personal property. The personal property is precious metals, art, tools, things that have more real value. So it's not like everything in your home or things that you own personally. Try and think about stuff that has true asset value. So we add all those things up and we take a look at that from a liability standpoint. This is credit card debt. Do you have credit card debt personally? Automobiles. Do you have student debt? Okay, that would be like this installment account under. Many of us have student loan debt that we need to put on here. It's something that we have personally. Tally all this up so that we have an understanding of what your liquid net worth looks like. The salary component, again, if you have a spouse that has outside employment, because secondary source of income is going to be very important if the business is not profitable. If we're looking for access to capital, it's going to be important that we have other sources of income somewhere from a spouse, our Social Security, is there disability payments, what else is available to us as some sort of salaries or payment? Are you a W-2 employee for your own company? And that's a big question that we get. And, many of us are not. Many of us kind of play that game between doing owner draws and distributions and putting that information together. So we got to be a little careful here with the salary piece, that it's not just owner draws and distribution checks that we've written to ourselves. If you have 2019 tax returns completed, which you should by now, it's easier to show this number as far as what maybe our net income looks like. Okay, credit card balances, what does that look like there? I don't need all of the information on the brokerage account, more of just a value. Do you own a home? Other details, signature here. So again, personal asset statement. So we'll need to put this together to have access to capital. The SBA Form 1919 that you see here, it's really more of an information gathering type document as far as trying to better understand you and the other owners, how much of a loan that you're looking for, sort of your structure. This is an important one. Number of existing employees, number of jobs to be created as a result of the loan. So there's certain programs out there that, again, look at it from a holistic approach in that, are we adding jobs? How does this loan affect the business and the community around it? And so that's why they're asking these types of questions. Is it something where if we get a $50,000 or $100,000 loan, are we able to add 2 jobs? Right, that's a benefit to the community. And so there's certain programs that may be looking at that. And so it's an important thought process to consider about how the funds are going to be used to support possibly the community and bringing new employees in. A lot of just Q&A, yes and no type questions. Have you ever requested a loan amount, the SBA, before? Do you operate a franchise? So this is important, making sure that if you operate a franchise, that you have that information, that franchise agreement in place. Have you ever filed for bankruptcy? There are programs out there for folks, even if you file for bankruptcy, but it's important to notate this on this form so that everybody knows up front. Okay, we don't want to start diving deeper into this and looking at programs that you don't qualify for because you've had a bankruptcy. So if we know that you had a bankruptcy, that's okay. We can work on it. And there may be other programs that are available to you. Pending legal action. Are you currently involved in any pending legal action? This would include divorce. So unfortunately, if you're going through a separation, you may have to have that finalized before you'll have access to financing, because the lender doesn't know which way it's going to go, right? Who's going to be obligated for what the structure is going to look like, what our assets and debt's going to be split up, what's going to happen there. So unfortunately, if you're going through some sort of separation, divorce, it could be considered a situation where we're going to have to wait until this gets resolved. Now, that shouldn't stop you from starting to put this process together. So even if your business is involved in some sort of legal action right now, it shouldn't stop me from at least starting to put all these documents together. Again, this is something I want to start early so that as I work through it, maybe I'm not going to get financing today. Maybe it's 3, 6, 12 months from now, but it's all about the strategy. It's all about knowing what documents I need to still put together in order to complete the applications. Okay, so this is just something we work through with your consultant as far as some Q&A type questions and understanding your eligibility for certain SBA type financing. Okay, so we went through credit report, there's your personal finance statement, tax returns. They're going to want to look, if you have 3 years of business tax returns, we're going to want to see them. This just helps us better understand the business from a tax perspective, what you've reported. Important for this year, it's this piece here, and that's what we talked about first, business financial statements for the year. Those interim financials that we worked through. So that was this whole exercise where we put all the current information through October into this type of a sheet, or if you already have generated P&Ls and balance sheets through QuickBooks or whatever way that you present them, this is going to be really important this year to understand your recovery effort. And we talked about this one as well, latest AR and AP aging reports. It's, COVID has affected us in both of those ways. It's been more difficult to collect our accounts receivable. We're having to make deals, negotiations with our customers, our clients. And then on the AP side, so our payable side, we're doing the same thing, right? We're talking to our vendors and trying to negotiate deals. Well, any lender is going to want to understand that. They're going to want to know your aging report and what's happening there, what to expect. Some sort of a personal resume. Resumes are fine. I like to call it more executive summary. It is a better description for me. And the bank or any lender is going to want to understand you as a business owner. Why, what makes you successful in this line of work? This is really important if you're looking at startup capital, trying to put together a new venture. They're going to want to make sure that you have experience, in that particular field. It's more difficult, if you were an auto mechanic and now you want to open, a bakery, you don't have that direct experience of running a bakery. So you may have to hire on a manager that has, you know, the time. You may go work for a bakery for a while before you would be eligible or have access to debt capital. So that's why, you know, the executive summary is a little more important, I think, than just a resume. I think the executive summary explains a little bit more about why you would be successful in what it is that you're doing. Of course, a business plan, you know, this isn't that old school 38-pager business plan as it used to be. This is a little more drilled down to use of funds. You know, what is our plan? Can you explain it to me in 2 pages or less about what your business is about, how we can utilize funds? And then we typically just jump right to the financials. You know, we want to understand the business by the numbers. So it's more about just history. If you have history of the business, to try and write those things out. And lastly, to write how much you're seeking, and then how will those funds be utilized? It's just as important. It's one thing to be like, I just need 50 grand and I'll be good. No, you know, we need to understand how you're going to spend that 50,000. Are you going to hire an employee? So we're looking at using part of the funds for payroll, some marketing expenses, or are you going to use majority of the funds to purchase equipment, which then in turn would increase revenue, do something different. So we need to talk through and better understand about how the money be used. And then also some sort of a loan amount. Like we want to have projections in place. We want to be able to work through this exercise, you know, and say, gosh, I know we could really use another 50,000 by January 21 to just help either, you know, restructure some debt or work on a different revenue stream. We're trying to put this all together. Okay, and then I would break down again how I would plan on spending that 50,000. Some of it's going to be operational expenses. Hopefully, you've had an opportunity to negotiate with your landlord. You know, that to me is a big piece. You know, even in this example, we look at what rent looks like. We had 3 months of deferment, you know, kind of baked into this thing. But you know, what happened after that? Is it just put on the back end? Am I now paying, you know, 1.5 times or something? Am I paying $9,000 a month now to try and make up for those 3 months that were deferred? That this is what's hurting some folks. And so we need to get back to trying to negotiating with our landlords and looking at longer term solutions. Because typically it's rent, right? It's rent and payroll are 2 largest line items of expenses on our kind of sales general administrative, you know, outside of your COGS or your cost of goods. We're looking at rent and payroll. So we need to get those 2 under control. So we're going to go through all of that process and take a look at it, and then make a determination of how much money we think we need, and then put that together on a use of funds statement. Okay, so I think we went through all that. So what are our takeaways for today in the process to access to capital? You know, 1, we're going to review our revenue streams and our feasibility for those revenue streams moving forward. We want to understand and analyze our expenses. What have we done to minimize or reduce our cash burn, and how are we doing from a cash flow perspective? And then we want to understand our sources of capital. What have we accessed before? Do we have idle and PPP on the books? All right, are we looking for additional capital? So we want to have a better understanding of what all this means to our business and how much are we going to need. And then ultimately putting that together and continue to push out the cash flow projections so that we have now a roadmap in place, a roadmap for success. We have sales goals that are on paper, ones that we can share with our sales team, and we can implement these plans, and we can hold ourselves accountable while we're working through and waiting on additional debt capital. Okay, so, you know, besides all that very specific plans, there's a couple of things that, you know, that we're hoping for to come out. One, the Fed, I'm just looking for this other sheet here. The Fed got together. So Washington, we're talking about the House and Senate and things. They got back into session yesterday. Not a lot of movement, unfortunately. You know, it seems like still a lot of political posturing going on. We're seeing some proposals coming forward. Reluctant for anybody, it seems, to actually vote on anything right now. So again, I'm not really planning on PPP 2.0 or economic injury disaster loan or the stimulus right now. There are a couple of funds that we're starting to see kind of take shape. One, the California Rebuilding Fund. Okay, they're hoping to push this out to the state of California. I believe there's 25 million that's part of this fund, and there'll be a portal to which you can put some information in that will then introduce you or make a kind of a handshake to a lender that you would then go through the process and looking for these funds. I believe the maximum loan amount's $100,000. You can see a number of the banks and institutions that are going to be participating in this. It was supposed to come out in October. It's gotten pushed now into November. So I'm a little concerned about the timing on this and when it's going to come about. But this is another access to capital piece that we're hopeful for to try and help small businesses. But again, it's limited. 25 million is going to go in a heartbeat in California. So I'm not very hopeful that many Main Street type businesses are going to get access to this fund. But maybe, but it's something to look out for. I know Wells Fargo has their professional or a like dental office, attorneys, folks, the professional type development, a professional program, lending program that's very specific to those types of businesses that have that kind of client-based. You think dental office where they have a number of clients, or an attorney's office, or those types of things. So Wells Fargo has a number of programs. Access to business credit cards. If you haven't already applied to one through your banking institution, maybe there's an opportunity to establish some additional credit card debt opportunities there. So access to capital. Unfortunately, that's where we're at. It's a process. This is the roadmap to kind of navigate or work through that process. And we have consultants here that can help you through it and help you package and help you tell that story about your business to have access to capital. But it's still pretty tight out there. There's still a lot of uncertainty. And so the sooner the better that you can start this process and putting the information together. Then more importantly for me, it's been building out this cash flow projection sheet so that you have a roadmap for your business. So that's all I have as far as a presentation today. If you have any direct questions for me, again, PPP forgiveness, idle questions, what I'm seeing from the Fed side, if you have anything, or cash flow questions about your P&L or balance sheets, anything like that, I'm here. You can ask those questions, just drop them into the Q&A, and I do my best to answer for you. If not, Edna, that's what I have for today.
Yeah, I guess we can go ahead and conclude the webinar now. If obviously there's more questions, Craig has his contact information on the slide.
And slides, here we go.
Yeah, and
I'll drop this in the chat box. If you guys need to contact me directly, feel free, email me anytime. Okay, and we can help you where we can.
well, thank you so much for everyone that joined today.
Thank you. Appreciate it, everyone. Have a great day.